on domestic venture capital firm 314 Capital, which has closed its fourth early stage fund. This is worth $200 million. Let's find out a little bit more about the profile of companies that are being invested in, what the check size is, and what the outlook is when it comes to startup funding. Joining in right now, we have with us Siddarth Pai of 314 Capital. Thank you so much, Siddarth, for joining in. To begin with, let's just talk a little bit about, the kind of companies that you're looking to invest in via this fourth early stage fund, and what does the check size range from?
Perfect. So thank you very much for that. So at 314 Capital, even with the latest fund, Fund 4, we're continuing to actually stick to our investment thesis of focusing on sectors such as consumer internet, SaaS, fintech, enterprise, and SME digitization. But for this particular fund in particular, what we are going to look at a lot more in detail is actually going to be digital health and climate tech as well. Digital health, especially with the entire Bharat health stack that's actually been created right now, can actually become the UPI moment for India to end up actually frogging a large amount of the healthcare deficit that we have for a substantial period of time itself. From an investment perspective also, we continue to remain lean investors. Our check sizes range from anywhere between $500,000 to $5 million. Initially, we start following on with our companies and being invested with them for a substantial period of time. So we would like to actually get in fairly early with this check size and continue to invest and actually build a relationship with the company as they end up scaling and growing forward.
In total, what are the kind of assets under management that is being run by the firm? And can you just walk us through, how many funds you've raised so far?
Perfect. So we've actually raised 6 funds as of now, and with this fund 4 being the 6th fund that we've actually raised. The firm cumulatively manages over 3,700 crores of committed capital. That's roughly about $500 million plus. And the market value of this particular investments is actually over $750 million as of now. And we're happy to announce that the cumulative market cap of all the companies in our portfolio, despite being an early stage company, is over $7.5 billion. The Indian opportunity is still ripe, and we're only in year 6 of our existence itself. We do actually plan on actually deepening this and increasing value over time also.
All right, let's get a little specific then in terms of the strategy when it comes to sectors. Is it going to be completely sector agnostic? Are you going to look at particular sectors? Is it going to be very tech focused? Those are the companies that you're looking at. Perhaps new areas like digital health, climate tech, etc. I understand is going to be the focal point.
Yes, that's right. So we do actually plan on continuing down the same trajectory as what we've done previously. We think the India opportunity set is actually expounded right now through digital public goods that have come out. So you look at OCEN, look at ONDC, look at the Bharat health stack, etc. We are actually looking for attractive companies within these particular spaces itself. I think the Indian consumption stories in India has actually crossed $2,000 in terms of purchasing power parity. We have actually reached a recent inflection point in terms of Indian consumption, but it's no longer for sustenance, but it's also going to start being for consumption to a much larger extent. Tapping into the profit pools that this consumption demand can actually create is something we're looking at very intently from this particular fund also. Another lens that we use at 314 is to ensure there is a strong ESG alignment from portfolio companies as well. This is where health tech as well as climate tech actually ends up focusing on to a large extent. We're of the view that in order for the world to actually change and actually commit to its climate goals, that early stage venture capital companies will actually play a substantial role, because these companies will actually become the giants of industry in the next 5 to 10 years. And as early stage investors, our commitment to this will ensure alignment, which will actually hold them in very good stead as they end up scaling as well.
Siddarth, but at a time like this, when we're looking at a lot of VC money being undeployed, there's one of the worst funding winters that we're experiencing in the recent times, and has this been a challenge at a time like this, and what does the backdrop look like for a lot of these companies?
I think the challenging situation that we're all going through right now should actually end up resolving over the next couple of quarters itself. Even during our fundraise, a large amount of the investors' due diligence questions were actually around the macro situation that exists and the ability to actually deploy. We've already made investments from this particular fund so far, and we have a very strong deal flow pipeline that we've already cultivated itself. So I think from our side, when there is actually blood on the street, it's a perfect time to actually end up investing, because some of the rounds and the quality of founders we're getting are actually phenomenal. So we are actually within the entire program that we developed at 314. We are actually seeing great investment opportunities at extremely attractive prices, and we love to actually capitalize upon that itself. I think from a larger investor perspective, people are waiting for companies to actually start turning profitable as they're in the growth and late stages. I mean, seeing the great amount of reduction of capital investments in those particular areas. But since we're an early stage fund, I think this is the perfect time to end up actually deploying. As I said, when the market sentiment actually turns, these assets are actually going to be well priced and the perfect space to end up capitalizing upon the glut of venture capital. I think there's about $500 billion of VC funding that's actually of dry powder looking at India alone. And if we're going to capitalize upon a small part of that, these companies will actually have a strong head start compared to any of their peers that exist in the market.
Okay, so give us a little bit of a backdrop in terms of some of the companies that have already been invested in. There have been unicorns, the likes of Licious, Open, Darwinbox. Just walk us through the investments that have been made.
Sure, happy to. So we were the first investors in Licious. We actually got into them in the very seed round, and Licious now become a category leader and a category creator as well. Darwinbox actually proved our thesis that Indians can actually create SaaS unicorns with large average contract values from India itself. When we invested in Darwinbox in 2016, there's a very strong push to say that India would never actually purchase SaaS, and the US is the largest SaaS market. But because we have a firm belief in the Indian consumption story and the contrarian bets that we end up making, it has hold us a very good stead. I think Cuckoo.fm is a fantastic company that we should speak about. They've actually crossed over $2 million, the 2 million paying customers in India itself. And they've actually proved that not just your tier one metro cities end up paying, but the whole of India, if they actually do see value in a product, they will actually end up paying money when it comes to that itself. So any part of the Indian consumption story that can be accelerated to technology is something that we end up actually looking at clearly. I'm very excited for companies that we have in Fund 4. We are seeing some tremendous companies in the focus areas that we end up having as well. And they will actually join the pantheon of companies such as Licious, Darwinbox, etc. over time itself.
Well, let's put the spotlight today on